So very good morning everyone. So in the last class we completed basics of law, wherein we completed the concept of what is an act. Simply in the previous session we first completed what is the law, and yesterday's session we completed what is an act, the components, everything has been completed, and the historical background of direct taxes in India. It's a small background only, where it started in 1864. Slowly the transformation happened over time. Deductions added, exemptions added, alternate tax regime added. So these are some changes that were made to the direct taxes law. Because direct taxes law history, if we have to discuss every year, because every year changes will come. Correct or not? Therefore, every change we cannot speak, because over last 60 years, 60 times changes happened. Because every year Finance Act will be there. Clear? So therefore it's not possible to tell each and every year what happened. Significant events happened in the direct taxes, I told you in the last session. Okay. Next. Today we are going to effectively start with our income tax related syllabus as well. Okay. So this is the heading you need to keep. Basic concepts, chapter 1. Listen, later you can write. First see the screen. What are all the topics we need to discuss in the basics? Basics means don't understand that we are going to read some theory. These are extremely important for exam as well, so please see there. Number 1. What is the first one? Direct tax versus indirect tax. Next one, constitutional background. Next one, section number 4, the basis of charge. Next one, tax rate in relation to, vis-a-vis means in relation to Finance Act tax rates. Sir, tax rates in relation to Finance Act means other tax rates are also there. Yes, there are so many. There are 18 other tax rates are there, which are given under Income Tax Act. Which are given under Income Tax Act, not given under Finance Act. They are given under Income Tax Act. Okay, reason we will discuss when we come there. Next one, definitions. What definition? Assessment year, previous year, person, assessee, assessment. These are the different definitions we need to understand. Then after that, income tax is tax on income, total income. Correct? Yes, sir, what is an income? Income is a receipt. Income is a receipt. Receipt is of two types. Revenue receipt, capital receipt. Which receipt is an income is what we are going to discuss here. The biggest discussion in this chapter happens here. Okay? Because there are around 24 different concepts we need to discuss to understand what is a revenue receipt and what is a capital receipt. We will read this concept along with this concept. What are the two concepts? Capital receipt, revenue receipt, and income definition. The biggest discussion that happens in this basic concept. Exam ki expected area. This one and this one. Chance is there to come in examination. There are two areas in this chapter which are expected for exam. This is the first one. Second, let us continue. Treatment of illegal income for tax purposes. Treatment of illegal income for tax purposes. A person is doing smuggling. Smuggling is legal or illegal? Illegal. He is earning money. He will pay tax. He has to. That is illegal type income taxation. So that we will see here. Diversion of income by overriding title is the horrible concept that we need to learn. Final concept. But let us learn also that. I will spend around 30 minutes also on that. There is a concept called as application of income and diversion of income by a overriding title. Meaning, we will discuss when we come there. Next one is a mutual activity and principle of mutuality. See a final concept, but we will have a small discussion in CA Inter because it is there in your study material. Maybe big questions like in final may not be tested, but theory question may come in this area, so let's not leave. That's called as a mutual activity, also called as a principle of mutuality. Next one, also I told you already, in a capital receipt, revenue receipt, only we will read receipts of income. Next one, gross total income. Next one, this and this is expected in examination. Very, 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 very important area. Which one? Concept of marginal relief. Tomorrow's class I will discuss about it, not today. Time will not be there. because that comes at the last of this chapter. So maybe time is not sufficient to deal with this. So marginal relief and 87A rebate, two important concepts. Next one. What is the next one? Exception to assessment year. This is also called as an accelerated assessment. Okay. This is another. Actually, this is a topic we will discuss in. But I will discuss here itself and complete along with the exam questions. Okay. Next. What is the next one? Another expected area for exam from the basic concepts. Agricultural income. There is a concept called as scheme of partial integration. Scheme of partial integration. SOP they call. SOPI. Scheme of partial integration. Okay. Very, very popular concept. Another expected area. Understanding the difference between exemption and deduction. Next one. Method of accounting, how it will affect the tax purpose. What do you mean by method of accounting? Accounting can be done in two ways. One, cash basis, another accrual basis. Income tax will follow which basis to tax? Cash or accrual? No. That's why we have to read section number 145. 145 section of method of accounting was given. Last one, rounding off of taxation. Rounding off of? For example, a person income tax came to 1,99,278. Okay, it will be rounded off to 199,280. This is done using a section called as 288B, rounding off of total income or tax liability. Okay, so this is all we are going to discuss in this area. Very, very big chapter, basic concepts. Generally, people discuss assessment year, previous year, and basic and one or two concepts in basics, and they will go to first chapter. I mean second chapter, residential status. But in this chapter itself, we are going to see many examination concepts as well. Examination concept number 1, capital receipt, revenue receipt, and income treated as, receipts treated as income, one exam area. Second one, concept of marginal relief and rebate under 87A. The last attempt CA final it came. Okay, so that will be one examination area. Third one, agricultural income is a third important area. Along with agricultural income, we will discuss about the concept of scheme of partial integration. Clear everyone? All these put together complete our concept called as chapter number 1, called as basic concepts. Okay, please write down the notes clearly, write down the learning objectives. Up to tax rate versus finance side completed. Definitions over. Can you scroll down? Completed. Up to gross total income completed writing. Completed? Okay. See here. First we need to start with what is the concept of direct tax and indirect tax. Difference should be understood now first. GST completed for you. So at least you will have a clarity as to how indirect taxes will behave. Okay. But we need to understand how the direct taxes will be there. Okay. See the screen once. First I will roughly explain you the concept. See. There are two types of tax systems in India. One is direct tax, another one is indirect tax. See, how this particular concept will apply. There are two very, very important things. Incidence of tax, imposition of tax. Means, incidence means who has to do what in order to levy that tax is a question. See, in case of direct taxes, listen, in case of direct taxes, incidence and imposition will be on same person. Example, popular direct taxes in India are two. Number one, income tax. Number two, wealth tax. But wealth tax was abolished now. Last 7 years back, it was completely abolished from India. Which concept? Wealth tax concept is not there today. When I wrote CA final, it is a 10 marks area in exam. Which concept? Wealth tax. At that time, income tax 90 marks, wealth tax 10 marks. But now wealth tax has been abolished in India. So there is no concept of wealth tax. Because they made necessary changes in the gift taxation in section 56. Listening? Capital gains also made changes. Therefore, they thought that there is no need for wealth tax in India. Abolishing the wealth tax happened 7-8 years back. So, popular direct tax in India will be? Answer. Income tax. Income tax, what is the main motive and what is the main incidence and imposition? If I earn the income, I will pay the tax. If you earn the income, you will pay the tax. If I earn the income, you will not pay the tax. Clear or not? And who is the person responsible to earn the income is the same person who is responsible to pay the tax as well. If you remember, I told you an example on day 1 or day 2, I didn't remember. I think in day 1 only. Day 1 or day 2, I didn't remember exactly which day. But you tell me, you know this answer. House I purchased. Income is transferred to my father. Do you remember this example? House is belonging to me. I am the owner of the house. Income should come to me. But just to avail senior citizen status in income tax, I diverted the income to my father's bank account and claiming that this is his income. Clear? What I said at that time? Clubbing happens. Yes, day 1 only I said it. When summarizing the concept of clubbing provisions, I told you this. What will apply? Clubbing provisions. What you understood from the clubbing provisions there? His income will be added to my income. The motive here is not addition and clubbing. Motive is who earn the income should pay the tax. That's the importance of direct taxes. Direct taxes like concept is incidence is in whose hands? Imposition also should be in his hands only. If you earn the income, why your father has to pay the tax? Did you understand the logic of that example or not? Yes, actually, asset belongs to me. Asset? Yes. Sir, I will give you an example here. Answer. I am taking classes. For that I will get money. Okay. I said, KS Academy, pay money to him. Will they pay? Na? Will not pay? Na? Will not pay. It is against to the rule. Because classes are taught by me, means income you cannot divert to him. Na? Do you know what KS Academy will tell wisely? I will transfer it to you. If you want, you transfer it to him. Clear? Yes, that's the idea behind. Okay. Who is having incidence of tax must also get the imposition of tax. So incidence and imposition will be on same person is a main motive of direct tax. Next thing, in income tax, forget about direct tax because only one income, only one direct tax is popular. Na? In income tax, you will earn money today but pay tax at a later stage. Pay tax at a previous year lo you will earn the income. Assessment year lo you will be paying the tax. Until the moment you earn, you will not pay any kind of taxation. Clear or not, everyone? So this is the idea. Now let us come to IDT, in indirect tax, popularly GST. Whenever indirect tax is concerned, incidence is on one person, imposition is on another person. I went to Apple store and purchased an iPhone. On the GST element is there. Listening? I will be paying money. Correct or not? I will be paying money. For example, I paid 1,50,000. 1,50,000, in that 1,50,000, what is also there? Because we call it MRP. Inclusive of all the taxes, GST, everything will be included into this. Correct? Now see here, observation required. Please see. I purchased a mobile phone, Apple phone from Apple store. If you observe clearly, who is earning the income? Customer is earning the income, or the vendor is earning the income? Loudly. And the income is earned by vendor, but taxes are paid by me. So tell me, incidence and imposition is on the same person, different persons are? For example, KS Academy, let us take. Okay? Service receiver, service provider, service receiver, service provider. Let us say KS Academy to the students. Okay? You are service recipient or service provider? Receiver, provider. Who is provider? KS Academy will pay, will receive money. When they earn income, they have to pay the tax. But on fee, you will pay the tax. Because it is all inclusive GST. Inclusive, exclusive. In one way, they are collecting GST from you. Correct or not? Game over. This is the idea behind. So what you need to understand, in case of income tax, incidence and imposition will be on same person. But in indirect taxes, incidence is on one person, imposition is on another person, except in some exceptional cases like reverse charge mechanism. Which area? Except there are some 7 exceptions will be there. Goods transport agencies, legal services, insurance companies, except these 6-7 exceptions, in all other cases, what will happen? Incidence is on one person, imposition is on another person. Understood the point clearly? For example, see there. In case of indirect tax, for example, B. A purchased goods at 50 rupee, sold at 60 rupee. Sold at 60 rupee. To whom he sold? To Mr. B. So B purchased at how much? In this, let us say 10% GST. Example, I can take exact rate 12/18. Just say, for example, 10% GST is already there. From whom this fellow is collecting? From whom this fellow? Yes, A is collecting inclusive of GST, MRP price. And in that already what is there? GST is already included. Taxes are already included. Who is paying this? B is paying. Income is earned by? Taxes are paid by? This is a concept of indirect taxes, especially GST. Same happens also in other indirect taxes in India. Are you understanding the point clearly? This is called as indirect tax. And moreover, next thing, income tax, earning income is a mandatory requirement. Earning income is a mandatory requirement. Indirect tax, earning of income is not a mandatory requirement. Earning of income is not a mandatory requirement. May happen, may not happen. But income is the main motive in case of income tax. Everyone understood the concept clearly? Okay. So this is the main point that you need to understand clearly. Clear? Everyone? For example, I give services to KS Academy. Okay? For my services rendered, I am the service provider. KS Academy will become Service recipient. Service? Now tell me, what income Case Academy is earning because of me? No, there is no income. From you income is getting earned. From me no income is earned. Hey, are you applying mind or not? Take me as example. I am there now. I am a faculty in Case Academy. Case Academy will pay me. I have GST registration because I am having my own academy. I will make my own sale. So I am a GST registered person. Now you answer my question. I am rendering services to Case Academy. I am service receiver, service provider. Service? Okay. I am a service provider. Case Academy will become? Service recipient. So they will pay me, correct or not? So technically they are not earning anything. I am earning money. Clear everyone? Always reverse charge mechanism also may not work in a right way. So main point that you have to understand is, in case of direct taxes, incidence happens with one person, imposing the tax happens on another person. In case of indirect taxation, so in case of direct taxation, incidence is on one person and the imposition is also on the same person. In case of indirect taxes, incidence is on one person, imposition will be on some other person. I think I said in a reverse way previous. I'm very, very sorry. So, direct tax both are same. Imposition, incidence and imposition. Indirect taxes, incidence is on one, imposing the taxation is on another person. Need not be income always. Listening, because sale, what is it? Sale. Sale is not an income. Sale is a sale amount, that's all. It's a receipt. Sale minus profit is an income. But GST is levied also on sale or not? So income is not a mandatory requirement. Income is not a mandatory requirement in case of indirect taxes. Listening everyone? This is the point that you need to understand. So I have put some differences also in my material. Just look at it. You can understand things clearly. Please read. Direct tax versus indirect tax. Please read. First one, nature. Direct taxes are the taxes directly incurred and paid by the person concerned. And who incurs that will also pay it. Next. Indirect taxes are paid by one person, but the same is recovered from another person. Though trader will pay, but from whom they collected? From the customer they collected and they paid. Okay. Next. Levied on. That's what I said. Income is the main requirement in case of income tax. But it is not on income. It is on purchase. It is on sale, manufacture, service provider, everything. Indirect taxes will be levied. Next. Very important. We already know na? Tax burden shifting. Tell me. Can I earn income and can I ask you to pay the tax? And the shifting of tax burden is possible or not possible? Not possible. So borne directly by the taxpayer. But in case of indirect taxes, tax burden is shifted to the subsequent user. This point also I told you. Time of collection. Tell me. Income tax will be paid while it is earned or in the next year? Loudly. Next year. Direct taxes are collected after income for a year is earned. Next, indirect tax collected at the time of sale or purchase or rendering of service. Sir, how sir? Tell me. I purchased this particular pack. This is an MRP product, correct? The moment I am purchasing it, I am purchasing this pack inclusive of all taxes. Means I am paying the tax after purchase at the time of purchase. Next thing, you go to some place, purchase something, they will give a tax invoice. What invoice? In tax invoice, they will write 10,000 plus 18% GST, 1,800, totally 11,800. And in that 11,800, what is also there? If you pay that 11,800, then only they will deliver the product to you. And in indirect tax, collection happens at a future time. Collection happens at the time of incidental to purchase. So it is collected at the time of sale, purchase or rendering of services. Examples? Income tax. I told you wealth tax is abolished in the financial year 16-17. And here it will be goods and services tax, customs duty. All these are different category. Everyone understood the concept clearly? Yes, everyone? Yes, This is the difference between direct tax and indirect tax. I will have 3 questions. Answer these 3, we will go to the next one. Incidence and imposition will be on whom in case of indirect tax? Incidence is on one person, imposition is on another person. In case of direct taxes, incidence and imposition will be on the same person. Shifting of tax burden possible, not possible? Hey, you should give both answers. Possible in case of indirect tax, not possible in case of direct tax. Clear? Next one after that. Where payment can be postponed to the future time. In direct tax, payment, technically Income Tax Act, income tax can be postponed to a future date. The future time or future date, whatever you call, the next year. But like that you cannot do in case of, because in the bill itself they include the GST and they will collect from you. So you have to pay at the time of purchase, sale or services rendered. Everyone understood the concept clearly? Write the notes on that in a simplified format. Keep the heading direct tax versus indirect tax. I told you I have a very good book where illustrations are there. Concepts, everything I will explain from the Bare Act, everything. Questions, answers we will take from this and we will do. Because this contains the most difficult questions that can be possible. Listening? So questions we will be, anyway we will do institute questions. But better than that, there are very difficult questions in this material. So we will also do those questions as and when required. Okay? Keep the heading direct tax versus indirect tax. Write down the answer. Okay? Direct tax. Direct tax is imposed on the same person on whom incidence is attracted. However, in case of indirect tax, up to here completed? Up to here completed? Let us have the examples also. So tell me, who paid salary? TCS. Tata Consultancy Services is paying a salary to Mr. A. Now who will pay the tax? TCS will pay tax. Huh? Who will pay the tax? A has to pay tax on his salary. So write down Mr. A provided services to Mr. B. So if A provided services to B, who will pay consideration? A will pay to B a consideration. Who has to pay the consideration? B will pay. Right on. B has to pay the consideration along with the GST. So A is making revenue, but the tax is paid by B. So this happens in case of indirect taxes. It's a classic example of incidence on one, imposition on another. Sir, if you are okay with the first one, we'll go into the second. Shall we go to the second point? Right on. So shifting of tax burden to another is not possible in DT, but possible in IDT. deferring the payment of tax is possible in case of DT but not possible in IDT. Do you know what is a defer? Defer means postpone. Okay, it's not defer, it's a defer. Deferment means postponement. Okay, so deferring the payment of tax is possible in case of DT but not possible in IDT. Because in income tax, what will happen? Income is earned in the previous year, tax is paid in the assessment year. But in case of indirect taxes, what will happen? Tax will be paid at the time of purchase, sale or providing of services. There is no concept of escape of paying the taxes and deferring it. Clear, everyone? That's it. So this is all the differences between the direct tax and indirect tax. We completed learning objective number 1. You can tick that. We completed the first learning object. Everyone clear to the point? Yes, any doubts regarding the first one, direct and indirect taxes? No, can we go to the next one? Yes, next. Small area, 2 minutes discussion, nothing great. Constitutional background of income tax. Let us discuss. Actually, yesterday we need to discuss this. Time not sufficient, that's why today I am discussing about this. Listen. Constitutional background. Sir, what is a constitutional background concept? Listen. In India, 1950 year, Jan 26th, Constitution has been approved and it came into existence. I want every one of you, please attentively listen to the concept, please. Okay? Constitution will not have sections. Constitution will have articles. Constitution will have articles. There are schedules and articles in Constitution of India. In that, there are almost around 2000 pages. Bare provisions are there. But to what is required for income tax, let us see. I will explain one point. Please listen carefully. I don't know whether you studied in GST or not. I don't know whether you studied at foundation or not. But I have to explain this concept must and should. Listen first. Anything to be done in India, purchase, sale, earning, something you have to do in India, that permission should be given by Constitution. Examples, let us see. What you are studying? Huh? CA. CA is a education. CA is a? You are doing because India has given a right of education to you. Clear or not? India has given means who has given? Constitution has given. Sir, Constitution has to give me a right of education. Go to Middle East countries, women cannot study. Because their countries or their law do not allow them to study after a particular age. And the constitution which stopped in that country, our country is not doing like that. Do you understand the point or not? Who gave that power? Constitution. Who do not give power to them? Their constitution. Did you understand my point clearly? Yeah? That's the power of constitution. And we generally take it very simply. Education is my right. Education is your right. Provided it is given by everyone understood the point or not? That constitution has to allow that to do. Clear or not? So try to understand what is valid in one country constitution may not be valid in another country constitution. Narcotics is valid not in India, but it is absolutely valid in USA. Are you understanding or not? 2020, 23, 24 year, I went to USA for 63 days. There what happens is narcotics, drugs are happily available everywhere. And it is allowed by California state as well. It is officially available. From this what you have to understand? Our country constitution don't allow narcotics. Understood? But some other country, Mexico happily available. So Mexico is the origin of all these things. Na? So try to understand clearly. Country constitution has to allow anything to happen. Some countries narcotics is valid. Some countries are not valid because their constitution is allowing that. Our constitution is not allowing that. Clear or not? Some countries will feed. Some countries will make money. Some countries will put money on terrorism. like Pakistan. They will feed on terrorism. Their constitution is allowing it indirectly. But India is not like that, na? So, thing you have to understand is, listen, across anything that happens, our constitution was very liberal on their citizens. Sir, I am walking on a road. That is a power given by constitution, because usage of roads is one of the power given by Constitution of India to its citizens. Understood the point clearly? Right of education is there. Right against exploitation is there. If anyone is misusing a person's rights, for example, I don't want to work somewhere, but a person is forcing me to do that, threatening me if I don't do, it is a right against the exploitation. You can file a complaint in the Supreme Court of India also. Fundamental rights, if they are getting breached, you can file a petition called as a writ petition. Listening everyone? 126 article is there, you can file a writ petition. Putting all these away, one thing you need to understand, Constitution of India, if something is not there, you cannot do that. Education is there, you are doing education. Entertainment is there, that's entertainment is allowed. Freedom of speech is there, media has increased in India. Listening, huh? Same freedom of speech is there in North Korea, na? Kim mama. Same freedom of speech. Can you expect in North? Do you know how North Korea will be? It is a hell on earth. If you do Mahapapam during this Janma, na, next Janma you will be born in North Korea. Understood the point or not? If you do all Mahapapams today, okay, the karma will hit you very badly by putting you in North Korea in the next Janma. So you will be severely damaged. So try to understand. Mode I wanted to tell is, North Korea is such a worst country in the world where constitution doesn't have anything to do there. Constitution will be decided by one family. Did you understand or not? Rights are not given properly. No right of education, no right of speech. Nothing is there because our constitution has given, their constitution did not give them. So try to understand clearly. The whole logic is very simple. We take constitution very simply, but constitution is like a Bhagavad Gita, is like a Quran, is like a Bible in India. Reason is, without that India cannot run. Everything you are doing today is because of constitution. I am coming by bus. That bus transport is allowed by constitution, because transport is one of the available provision given by the Constitution of India. India transport is allowed. Clear or not, everyone? Same thing you can't do in North Korea, because North Korea some people cannot use motor vehicles. They should use only cycle. Why? Transportation is not allowed in that country in some modes. India that is not there. Listening? You are coming by some mode of transportation, power given by constitution. You are having a proper education, power given by constitution. India is making imports and exports, power is given by constitution. You are going to some other country, power given by constitution. In North Korea you can't cross the country. Understood the point or not? North Korea you can't cross the country. Understood the point? So these are all certain points that I wanted to say. India so many things are allowed. India everything is permitted except a very few things. Constitution was extremely liberal. That's why people behave ruthlessly, because it's very much liberal, na? When certain times being more liberal is also difficult, because the media will speak whatever it want. Clear? So anyway, one thing is clear. From income tax point of view, I wanted to discuss about constitution. Constitution is like opening door for all the acts to come into India. I repeat, please everyone listen. Constitution is like a opening gate, opening door for all the acts to come into India. Act, 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 law, to come into India. For example, I wanted to bring a particular law, prohibiting transportation in India. First you have to see whether constitution will allow the transportation prohibition or not. No, transportation is allowed. That law cannot come. Sir, I wanted to bring, amend constitution first then. That's what done in the case of GST. In India, previously service tax is there, excise duty is there, octroi is there. Like that 11 acts are there totally. They are subsumed into GST. Listening, But one act, all these things concept is not there. So constitution ki gate not there. With gate not there means they will blast the gate and come. GST can't come like that. They created a gate using a section called as, or the article called as 246A. Are you listening or not? 246 capital A. The GST ki new gate was constructed. They said, okay, come through this door. Do you understand? Yes, sir. Everyone? Yes, sir. So the main point is, who should allow? If constitution law that is not there, you cannot bring that act. Like that, Companies Act came through which article? 246 article, entry number 43 and 44. Loudly. Article 246. Read with entry number, entry, gate, entry. I said gate, na? The gate ni they will call as a entry. Entry gate number 43, 44. Allowed what to come into India? Companies Act, companies, all these things are allowed under article number 246. Read with entry number 43 and 44. For example, if entry number 43, 44 is not there, India like companies cannot be there. What cannot be there? Companies cannot be there. Companies Act will not be there. Companies also cannot be there. Who allowed company? Article 43, entry 43 and 44. Because companies are allowed, Companies Act is allowed. Because Companies Act is allowed. Earning income is allowed, income tax is allowed. What I said? Earning income is allowed, income tax is allowed. But who allowed income tax? Which entry number? 82. Everyone repeat, what is it? 82. What is the backbone of Indian economy? No. From terms of economy. What is the economical backbone? In India, what is the economic backbone? Substantial part of revenue comes from what? Yeah. Loudly. Agriculture is free from taxation. Government of India, Constitution did not give any right to the government of India to impose tax on agricultural income. To impose? Bad response. To impose? So, on agricultural income, can you impose a tax in India? Cannot impose tax. Who did not give you that power? Constitution did not give you that power. Moreover, Section 10 Clause 1. Section 10 Clause 1 of Income Tax Act said that there is no tax on agricultural income. And both sides they said that. Constitution anyway do not give you power. Income tax also said that income from agricultural income is exempted, not taxable. Listening? Yes, everyone? Yes, that's why you observe all businessmen in India, no need to mention the names, will have agricultural lands because they divert their black money into white money through that agricultural income. Do you understand? Yes, for example, Kaushu Mukesh is there. I purchased 8 acres land in Vijayawada, in Andhra. Okay? Black money conversion want to happen. Now what we will do, we will take money, we will divert through agriculture, we will tell that it is agricultural income. Income tax assessing officer will come and count how many mangoes are there during the year. That's it. So agricultural income, but assessing officer, if you get a doubt, he will ask, this land is capable of generating, say for example, 3,000 mangoes. But as per your record, you are showing 10 lakh rupees, which will be possible only if you sell 7,000 mangoes. A 3,000 mango land, how it generated 7,000, then he will get a doubt. Doubts if you don't entertain, safely if you do, happy black money conversion to white money can happen through the agricultural lands in India. That's why all business people will maintain agricultural lands. Understood the point or not? That too, they will maintain agricultural lands relating to costly agricultural produce. Not like leafy vegetables, lemons, etc. Costly mangoes, apple, grape. Are you understanding? Yes, then they can make more money out of it. And more black money can get converted into white money using that agriculture. Leafy vegetables and lemons, guava if you make, guava normally 5 rupee outside. Even if you have 1 lakh, 5 lakh only can be converted. But one bunch of grapes is around 300 rupees. If you have that 8 acres, you can convert hundreds of crores rupees into black into white. Sir, don't do that. I'm telling what people are doing using agricultural lands in India. Agricultural income is taxable or not taxable? Loudly? But it is taxable in some cases. That concept, a scheme of partial integration. Scheme of? I told agricultural income there is one concept called as a SOPI. Scheme of partial integration. In that, agricultural income is and agricultural income is not taxable, but some portion of that income will be taxable. How it will be is a super area. We will see in this area only, but in the tomorrow's class in agricultural income area. Okay, so that's the point. Constitutional background. Let us come back. There are two articles, 245, 246. In that, most important is 246. What is 246 article? Listen first. In India, there is constitution. In that article 246, article 246 of constitution says that if a law has to apply to whole of India, if a law has to whole of India, Parliament will have exclusive power. When I use the word exclusive, only, no other person other than Parliament. That's the meaning. Okay, tell what I said. No. From the beginning you should tell. If a law has to apply to the whole of India, and from Jammu Kashmir to Kanyakumari, if you have to apply everywhere, then such act should be approved by whom? Exclusive powers are given only to the Parliament. These laws which apply to entire India are kept in a list called as a union list. Which list? Union list. Loudly? Union. Union means what? Combination of all the states. Union. Union list it is there. Not any one state. Union of all the states. Are you listening? Yes, so tell me what I said. If a law has to apply to the whole of India, Parliament has exclusive power to bring such a law into existence. Approval of that law can be made only by the Parliament. Those laws which apply to entire India are kept in a list. There is a list where all the union laws are there. That list is called as what list? Union list. Which list? List 1 they call. What call? List 1 they will call. Second, if a law has to apply only to a particular state, only to a and other states are not doing that, this state wanted to bring that. So many laws are there like that. Every state will have their own laws. If I wanted to bring a law only to a particular state, exclusive powers are given to the concerned state legislature and assembly. Parliament is for India. State legislature is for particular state. Understood the point? We call assembly. Assembly. In Parliament, Lok Sabha, Rajya Sabha. Like that in case of state level, MLA, MLC, Legislative Assembly, Legislative Council. Council is like Rajya Sabha, Assembly is like Lok Sabha. State laws, state legislature means two legislatures, upper, lower, or lower and upper. Lower is called as Assembly, upper is called as Council. Hey, are you listening? Tell me now. I wanted to bring a law applicable only to the state of Andhra Pradesh. What I need to do? Tamil Nadu state will approve the law, na? Parliament will approve that law, na? It will be approved only by the state legislature of state of Andhra Pradesh. I wanted to bring a law only to the state of Tamil Nadu. Then who will approve? State legislature of Tamil Nadu has to approve. Both houses, MLA, MLC, majority has to approve. These are called as state list. Enna list here? These are kept in list 2. These are kept in list 2. Some laws are there. They are requiring approval of both state as well as center separately. Classic example, GST. These are called as a concurrent list. Enna list? List 3. List 3. Tell me 3 things I said. Law requiring approval, law applicable to whole of India. Then it should be the exclusive powers are given to whom? Parliament. To approve that particular law. These acts are given in which list? Union list. List number? Next, I wanted to apply a law only to a particular. Then who should approve? State legislature has to approve. These are kept in a list called as list number 2. I wanted to apply the act to entire India, but to the states in a different way, center in a different way, like SGST, CGST. Listening? SGST of Tamil Nadu, SGST of Andhra, same or different? Different. But CGST, same. Overall GST is total India again. Therefore, SGST is approved by states, CGST is approved by parliament. In total, GST is approved by both the center and state. GST comes in concurrent list. Understood the point clearly? Yeah? So, if a law is to be applicable to both center as well as state, but differently, then it should be approved by parliament as well as by the state legislatures. These are kept in a list called as concurrent list. Number is list 3. Income tax comes under which category now? Andhra one income tax, Tamil Nadu one income tax, Orissa another income tax, like that, or entire India only one income tax? And this is a central act or state act? Union list or state list? List 1 or list 2? Loudly? Entry number 82. That itself you need to remember. MCQ, so they can ask a question. See here. (246). In my notes I have given summary of constitution. Okay. Article 246(1). Exercise by central government or state government for levy of various taxes. Central government. Central government. In case of which one? State government in case of list 2. State and central and state in case of? I told you this or not already? Next. I told now 246A. Just 10 minutes back I told you 246A. That is not for income tax act. That is for what? Actually, previously 246 is there. Now GST ki no gate. Therefore, they created new gate called as 246 capital A. Sorry, I am not going to discuss about this now. Because already you might have learned, na? Now see. List number called as entry number, power given to levy other than on agricultural income. Ante game over. Remaining all are only for your understanding purposes. Excise duty, customs, all these I have given. Are you listening? Next. So this is a point here. Everyone understood the logic clearly? So, Tamil Nadu State Education Board, Andhra Pradesh State Education Board, same or different? All education boards are under concurrent list. Overall education policy is prepared by central government. But concerned state government syllabus is different. Na? What is the medium in Tamil Nadu? What is the medium in Andhra? Obviously, answer is very, very clear. Na? Language change means how syllabus will be same. Therefore, overall education system is central government responsibility. But the syllabus and other things are state government's responsibility. From this, what is the moral of the story? Education is always a concurrent list. Understood the point clearly? And even forests also same. That's why I have given some examples here. Even though not in syllabus only, at least you will read and understand. Forest is there. Na? Overall forest and preservation of wildlife is a responsibility of central government. Correct? But state governments will conduct the civils examination. Okay? Union examination is called as a UPSC. What is it called? State level is called as a APPSC. And Andhra Pradesh kaithe Andhra Pradesh Public Service Commission. Like that I think it will be TNPSC here. What is TNPSC? Tamil Nadu Public Service Commission. There if you get rank, you will be deputed into forest services like that. That is only for that particular state. Even forest services are also in concurrent list. Like that, so many are there. I have given 1 or 2 examples. If you read, you can understand. Okay. What is required for exam, I will discuss about that very much in detail. Other things, I will just tell you the logic. Mainly, tell me now, who gave power for income tax to enter into India? Constitution. Constitution. Article number? Array, again you forgot. Article number? Article number? Very good. Which list? List number. List 1. Name? Union? In that which entry number? In which schedule? 7th schedule. That you remember. Which schedule? Yeah? That's it. This is the constitutional background of income tax. I think every one of you had a full clarity. Yeah? Write down a summary in your notes. We'll go to the next one. Completed writing? Shall we continue? We are now done with the constitutional background. So tell me, what are the two learning objectives we have completed? Direct tax versus indirect tax over next one, constitutional background. You can tick those, two things are completed. Now we are coming into the act directly, section 4. Please keep the heading. Write down. Topic 3. Basis of charge. Section 4. Basis of charge. Section 4. Shall we? Listen carefully. Let us first go to the Bayer Act. Yesterday already we read this, if you remember. Charge of income tax. But again, now we are coming effectively into the concept. Now let us read. From the Bayer Act we are going to study. Please see here. Where any central act enacts that income tax shall be charged for any assessment year at any rate or rates, income tax at that rate or those rates shall be charged for that year in accordance with and subject to the provisions of this act in respect of total income of the previous year of every person, provided that where by virtue of any provision of this act income tax is to be charged in respect of income of period other than previous year, income tax shall be charged accordingly. In respect of income chargeable under subsection 1, income tax shall be deducted at source or paid in advance where it is so deductible or payable under any provisions of this act. Read it first. Have you read? See, first point number 1, where any central act enacts, that enact means Parliament approved, President also approved. That's called as enactment. If you remember, I told you in the day number 1, see how important the basics are. Or else you don't understand the meaning of this enactment. First, start again. Where any central act enacts that income tax shall be charged for any assessment year at any rate or rates. Stop there. Where any central act enacts that income tax act shall be charged for any assessment year at the rate or rates. Sir, what is this central act? What is this central act? This can be either finance act or it can be the income tax act itself. That's why I told you. Generally the rates of tax are given in loudly. Generally the rates of tax are given in, but sometimes certain special rates are there. Those are given in the income tax act itself. 18 occasions are there. I told you previously. Okay, in that 18, 6 are applicable for inter, remaining are applicable for final. Clear? So in that special rate, capital gains only 6 rates are there. Those are applicable for you for your exams. Remaining not applicable for CA inter, applicable for CA final. So anyway, understood the concept clearly? So tell me, where any central act enacts that income tax shall be charged for any assessment year at any rate or rates, income tax at that rate or those rates shall be charged for that year. That year means which year? Assessment year, in accordance with and subject to the provisions of this act in respect of total income of the previous year of every person. In respect of total income of previous year of any person. See here. To simplify this, what they wanted to tell, let me put it clearly. Point number 1. there shall be a charge of tax. There shall be a on what? Income. Income earned in the previous year, but charged to tax in the at those rates of that year. Rates applicable to that year. That year means which year? Again I am asking, charge of income tax will be during previous year or assessment year? So, for example, what is previous year? What is assessment year? If you understand that clearly, first problem will get solved. So, what is assessment year? What is previous year? You might have a basic clarity, but in-depth understanding is required. So, see here. In this connection, we are going to learn some definitions. First definition is assessment year. Next definition is the next definition is every leave it. What is it? Income definition we are going to read along with revenue receipts and capital receipts. I told you already. There we will read. Except that three basic definitions we are going to read now. Tell me one by one. First one. Assessment year. Previous year. Person. Here, first point you need to understand. Department of Income Tax will not interfere in your earning process while you are earning. Sir, I didn't understand. Sir, I will give you an example. What is the year now? Which financial year we are running? 23, 24, 25, 26 or 24, 25? 25? You are earning income during this year, correct? While earning, department will not disturb you. Disturbance will start in the next year. Understood the point or not? When you are earning, department is least bothered. You earn 1,000 crores, you earn, no problem. But the torture will not start now. When they will start? Because assessment starts in the next year, not in this year. Are you understanding or not? That's why you see, people may earn any amount. This year they will not disturb you. You earn whatever you want. Next year, assessment year will begin. This year, income will be assessed in the next year. At that time, they will start sending you the notices and other things. Listening? But more about this, I will explain. So tell me, what are the three technical terms? Assessment year, previous year, person. Let us first have a clarity on three definitions. So, first, write down the basis of charge in a simplified format. Once after that, we will read three definitions and write down the notes as well. Clear? Write down. Before that, read this simplified format. Income tax shall be charged for any assessment year at the rates specified in the Annual Finance Act for that year, in respect of total income of the previous year of every person. Understood? Read again. Read both the lines. Whatever underline. Continue. Income tax shall be charged for any assessment year at the rates specified in the Annual Finance Act for that year, in respect of total income of the previous year of every person. Here, four concepts we are going to learn. What is assessment year? What is previous year? What is a person definition? Lastly, what is Finance Act? I told you, last class Finance Act. So that you have to understand. It's a mind-blowing concept, Finance Act concept. Okay? So Finance Act concept we need to understand. For example, Finance Act 2025, if I tell, Finance Act 2025 will contain what? Is a question. There are schedules. In that first schedule, three parts are there. What will be there in the each part we are going to understand today. Full clarity will come once you understand the Finance Act concept. Did you understand what I said? See, sir, here so many complicated concepts come, so please don't take it light. Why? I will tell you. For example, we are running which year now? 25-26 financial year, as you said. Completed or not yet? Not yet completed. We are in the month of June now. 25 June. Today 7th, 6th, 7th. So we are on 7th June of 2025. 7th June 2025 means it is a 25-26 financial year. 25? I am earning the income, correct or not? Yes, I am earning the income during this year. This income I will not pay tax now. When I will pay? Next year I will pay the tax. First I will earn income. Next I will pay the tax. Question is, as per which law, as per which act, I have to pay the tax in the next year? Income Tax Act. That's the worst answer. Income Tax Act, I know. Finance Act amendments came or not? Start again. Listen, I will ask question. Which financial year we are in? Very good. 25-26 year ki there is an Income Tax Act going on or not? 26-27 Income Tax Act will be same like 25-26 or will change? Now my question is, my assessment will be done this year or next year? That next year law will be same or different? Then my income should be computed to tax as per which year? Earning year or assessing year? Assessing year only. These all confusions will come. That's why listen carefully. It's not like GST, where everything is straightforward. Here everything is crooked. So please listen carefully. Confusion will come at the basics. So please try to understand. If you have any doubt, stop me. I will clarify, then we will go into the next one. Up to here, please honestly tell me, are you all understanding the concepts clearly? Yes, so there are points like this. Which act has to be applied? Which act means everyone know Income Tax Act. Which year income tax? Earning year income tax. Assessment year income tax is a question now. That also we have to read. After that, we need to understand some definitions first. Previous year, assessment year, person. After that, Finance Act concept. After that, we will come to the point what I said now. Shall we start? Yes, sir. Tell me. First tell the charging section. Section 4. Income tax shall be charged. Repeat. Income tax shall be charged for any assessment year. Any in respect of what? Of which year? Of whom? Read again in the way I said you now. Income tax shall be charged for any assessment year in respect of total income of previous year. So income tax shall be charged in which year? For the income earned in which year? By whom? Person, every person. By every person. I will pay tax on each head separately. All the heads total. That's why they did not use the word income. They used the word total income. Understood the point or not, everyone? Tell me, repeat again. Section 4, charging section. Repeat. Income tax shall be charged any assessment year total income of every person. This is the first part. At what rate? I am earning in this year rates, last year rates, next year rates, which rates? Rates mentioned in the Annual Finance Act for that assessment year. For that year means which year? Assessment year. Understood the point? So this is what we need to understand. Hope you are having a basic clarity on charging section. Right on. Write down, please. Income tax shall be charged. Are you understanding and writing? Write down properly. Don't skip the writing part. You can never remember a direct access unless and until you write down. It will be very difficult for you to remember if you don't write. Are you done with this? Here, but I have one small point. Please see here. See there. What is this word? Likewise, there is another word. What is this? Like this, there is another word. Like this, there is another word. You also make a box for all the 4 words. Assessment year, total income, previous year, person. That is the way to read. Finally, there is another word. What is the area called as a Finance Act? That we need to understand. So what is this Finance Act? What will be there inside the Finance Act? Shall we? See here once. Income tax shall be charged for any assessment year. Repeat. Income tax shall be charged for any assessment year in respect of the total income of the previous year of every person at the rates prescribed in the annual Finance Act relevant to the assessment year. This is what said in section number 4 of this particular act. But see here, sir, Bare Act, one or more points are there. Those points are very easy, nothing to write from that. Notes is only from the exam's point of view. What is very important for exam, we will write those. Clear? Why to write each and every point and waste our time? See here. Where any central act, Finance Act or Income Tax Act, enacts, approved by the Parliament and President, that income tax shall be charged for any assessment at the rate or rates. Okay, rate or rates, income tax at that rate shall be charged for that year in accordance with the provisions of Income Tax Act. Of this act means Income Tax Act, in respect of total income of the previous year of every person. So this all we completed. Listening, language we slightly changed for our easy understanding. Remaining is same. Next, sir, what is this? What is this? See, there is a concept called as income escaping assessment. What is the concept? Income escaping assessment. That is not there in inter-syllabus, that's there in final. Income escaping assessment. 142, all those things will get attracted. Income escaping assessment means a person will earn income, but he will not bring it to the books of accounts. Books, if something comes, I will pay tax. Books he will not bring. He will sell the asset, but he will not tell. He will make a gain, he will not record. That means that income is in the books, escape the books. Such assessment which will be done is called as an income escaping assessment. Which assessment? Now you answer me. 2023-24 previous year, I sold one land, but I did not bring that into the books of accounts. That part of income is escaping the assessment or not? Yes, assessing officer can go back for 8 years, 10 years, 6 years, like that he can go back and do the reassessment. Are you listening? Yes, so he will reopen and do the assessment again. Now you answer my question. 23-24 previous year, I made a capital gain, but I did not bring it to the records. Department found that they wanted to target me by raising a demand to pay the tax. As per which act? I was caught in 25-26, but the income is made in which year? Are you listening or not? Start again. I sold my land in which year? 23-24 is actually assessed in? But it is there a escaped assessment? Department came to know that in which year? 25, 26 they came to know about it. Are you listening? Now they wanted to go and assess that particular income and bring back to the books and ask me to pay the tax. Listening? When they are doing the assessment, 25, 26. Of which income? 23, 24. Listening? Now tell me, as per which law? As per that law they have to do, or as per today's law? That law only. Because that escaped assessment for that previous year, that's why this point came. Do you understand the point or not? In that year I did not pay the tax, na? You should apply that law. On that particular date, if I would have bring that into the books, whatever the tax I would have paid, that tax you should ask me to pay, along with penalties, interest, etc. Hey, listening? Yes, when I sold, there is a capital gain. On that I should pay 20% tax. Paid or not paid? When I have to pay that? 25, 26. So they will ask you to pay along with the penalties, interest, all these things. Understood? Yes, answer. Yes, if capital gain rate reduce it to 15% in 25, 26, they will not tell that pay at 25, 26, 15% rate. You escaped in which year? 23, 24. At that time, what relevant rate is there? As per that rate, the assessment will be done. Did you get the point or not? Yes, that's why read. Not just yes, sir. Read. Provided that, whereby virtue of any provision of this act, in our example, income escaping assessment, income tax is to be charged. Is charged or to be charged? To be charged in respect of income of that period, of a period, other than previous year. Income tax shall be charged accordingly. Understood or not? So rates of tax, all these things, at that time they will apply and they will pay the tax. Normally, assessment will be done as per which rates? Relevant assessment year Finance Act rates. But escaped assessment belongs to old years. Na? As per that relevant rates, they will assess to the tax. Do you understand? More about this you will see in CA final, not in inter. Inter, all these concepts are not there. This is income escaping assessment, 3-4 hours discussion in final. Here it is not there. But understood the logic clearly, everyone? Yes, everyone, last benches? Yes, so tell me, this year income is assessed to tax in which year? Next year. Next year we call as? This year we call as? It is general understanding, but definition will be something different slightly. We will see that. Before, next, read subsection 2. In respect of income chargeable under subsection number 1, under this year, previous year. Continue. Income tax shall be deducted at source or paid in advance, where it is so deductible or payable under any provisions of this act. See, this year income, when I should pay? This year income, when I should pay? Very good. Kaushik Mukesh is earning income. When I will pay? Answer. Subjected to TDS. If my revenue or income is subject to TDS, I told you on the day number 1, what payer has to do? Deduct at the source and then pay the balance only to me. Correct or not? And technically at the time of payment itself it is getting deducted or not? And generally income of this year will be charged in the next year, assessment year. But if any TDS obligation is there, you have to pay that immediately. Understood the point or not? I told another point also, advance tax. That's why they said paid in advance. Paid in? Advance tax concept, did I tell you in the last classes? What is the concept of advance tax? Listen, I will explain one more time if any person is missed the class. Generally, salaried employees, employer will have a track on salary amount. For example, if I hire you, I know how much salary to pay to you. Correct? Throughout the year, for example, I am hiring you for 1 lakh per month. That means I will have a clarity. Every month I should pay you how much? So I will have a clarity. But business persons, that clarity will not be there. How much I will earn next month, after that month how much I earn, how would I know? Some months it will be good business, some months it may be a bad business. Then how can you assess? Estimation. What? Estimation basis, so they will pay advance tax. What they will pay? Advance tax they will pay. But I have to tell you one important point in this connection. Listen carefully. You may get a doubt. Sir, you only said that previous year income will be assessed to tax in the next year, which is called as? Don't tell next year from now. Be more professional now. Use the terminology properly. Income of the previous year is a charge to tax in? Both are same years, sir. Two different years, sir. Assessment year is immediate consecutive year after previous year. What I said? Assessment year is immediate consecutive year after previous year. Is called as what year? That's clarity everyone have? Now continue. See, you may get a doubt, sir. You said just now as per section 4, income of this year is a charge to tax in next year. That is assessment year. As per the rates applicable as per the Finance Act for that relevant assessment year. We all read, na? Again you are saying TDS will be deducted today itself. Correct? Two doubts will come. Sir, you only said that as per that assessment year rates, we will pay tax. If TDS is deducted today itself, how would you know the rates which will come in the next Finance Act? So did you understand what I said now? I repeat question again. Listen carefully. Which year we are in? Which month we are in? June. You are paying me salary for May month. For? May month. When I will pay tax? Normally when I will pay tax? 25, 26 or 26, 27? As per the rates applicable for 26, 27. When I will know the rates? 26 Finance Act, I will know about the rates. When you are deducting TDS? Today itself you are deducting TDS. How do you know? Next Finance Act, what will come? Doubt or not? The first doubt we need to clarify. That's why I said you should understand how Finance Act works. Actually, Finance Act, when Finance Act of this year is given, next year rates they will give in advance for TDS payments. Are you understanding or not? First you should know how Finance Act behave. News channel you won't watch. When budget is going on, you will go to movie. Then what you will understand what is happening in India? Finance Act is a very good act where you need to understand so many facts. Finance Act, what happens is, there are 3 parts. How many? Part 1, 2, 3. 1 will contain tax rates for the previous year. Tax rate for the previous year. Part 3 will contain tax rates for the next year. And they will give an advance itself. Are you understanding? Such that employers can deduct TDS at that rate now itself. Did you understand my point? Now, sir, that I will discuss separately. Don't get confused. Sir, tell me. My question is, when I will earn income? Now. Paying tax? Next year. Forget about TDS. Paying tax? That is what actually we learned. But now I am telling that TDS will be deducted when you are paid. TDS is deducted. And then balance only will be paid. Until you are already paying the tax or not. So then how valid your argument is? This year income will be paid in next year. Your argument is wrong, na sir. Listen first. Nowhere in the section 4 they said, they used the word paid. They used the word charged. Are you understanding the point or not? Payment may be made this year. Charge happens next year. Sir, let us understand what is the meaning of that charge. Listen. TDS, how actually it will apply? Listen carefully. I will earn income. Yes, answer. Yes, I will earn income. Yes, on that, you are employer, I am employee. You are paying me 1 lakh salary. 10% TDS. Example. Okay. 10% TDS means how much you will deduct? Pay me how much? That means already I paid 10,000 or not. 12 months ki how much tax I will pay? Everyone. 1 lakh? 20,000 tax I already paid. By the end of March 31st, 2026. Correct? I already paid how much? 1,20,000 tax. Correct? Now listen. That's a tax I paid. Meanwhile, a tax deducted, tax paid, everything is okay. I calculated my total income. Calculated my total income. Total income I calculated. Income from salary, 12 lakh. Minus a tax paid, 1,20,000. So total 10 lakh 80,000. Are you understanding? 10 lakh? 10 lakh 80,000. Next year, again you did not pay any kind of tax. Are you understanding the point or not? Need to pay na? Need not pay na? But I have some LIC and other payments made. LIC, other things are there, na? That payments I made. Okay, I am paying HRA. Okay, I am having HRA. I am having 2 children where their school fees also I paid. These are all deductions available or not? This I will claim in the next year while filing the return of income. While filing the how employer will know how many children I have, which school they are studying, which LIC policy I am paying, how employer will know? If you give, they will know. If you don't give the details, how would they know? Therefore, they will deduct TDS on your salary and pay the balance. You already paid how much? 1,20,000. Deductions are availed or not availed? Not at all. Now you will assess your income after reducing all the deductions. Low. After reducing all the 10 lakh 80,000 you got 10 lakh 80 minus LIC 1 lakh 50. LIC 1 lakh 50. Like that they will calculate. After that, 7 lakhs income came. How much? 7 lakhs what came? Income came. 7 lakhs income came. Okay. 7 lakhs income has a tax rate or not slab? You have to pay 70,000. How much? But already you paid how much? 50,000 refund will be given to you within 7 days. That's why charge of income tax will be made in the assessment year, they say. So did you understand what I said now? So these refund in India, most of the people are doing fake refunds. That's what I told you on the day number 1. What refunds they are doing? And what will happen? Employer will deduct TDS on your income. Finally, they don't pay any LIC. They will tell, add 1 lakh 50, as if I paid LIC. Who will ask me? 140 crore population in India. Who will ask me? No one will ask me, na. Chalo, no problem. Write that I paid LIC 1 lakh 50. Who will ask? Which LIC you paid? Show me the proof. Who will ask? No one will ask. Add 1 lakh 50. HRA, na, 20,000 per month. Write down. Like that they will write. Total income will come to 5 lakh or 6 lakh or something. Listening? If you are a senior citizen, up to 6 lakh tax are not there. Full 1,20,000 refund. Government understood that. These people are cheaters. Last 1 week back, they released a notification saying that this year, while you are filing return of income for the last year, LIC policy you said you are paying, na? Write the policy number. We will check. HR you are saying, na? Write the details of the other person also, where the house is located. Give the details. Now did you understand the point or not? So, now did you understand what do you mean by assessment year previous year? Previous year, TDS deducted. Asal actual thing happens in the next year. Adi kada fun. TDS, everyone will deduct TDS. Understood? Next example also I will give. Listen. All persons are not required to pay advance tax. Big persons, good business is there, na? Advance tax concept has a meaning. So who is required to pay advance tax? In advance tax chapter we will read. That's why I am telling big people. Understand that way. Normal business, kirana shop is there. Normal business he will do. Maximum 60,000-70,000 per month he will earn revenue. For him, what advance tax he will tell? What advance tax he will pay? Did you understand? Na? He will be making 60,000-70,000 per month. But for small general stores, expenses are also there or not during the year. For them, advance tax, all this nonsense they don't do. For them, they don't pay any TDS also. You give an example. You tell the answer. You went to a shop, you purchased a close-up paste. You will deduct TDS and pay him amount. Answer, yeah? You will deduct TDS on his income. Close-up paste, 100 rupee, 10 rupee TDS, professional charges, 100 minus 10, 90 rupees you will pay. Na? No. That means answer, if you are a normal general stores operator, you will earn income throughout the year. Correct or not? When you will pay the tax? Then TDS question A will not arise. That's what I wanted to tell. Are you understanding or not? TDS question A does not arise and he will apply for composite scheme in GST. GST also not applicable. Understood? Sorry. Anyway, why I am telling all these things is, section 4 you should understand properly. What is section 4? Now tell. Heading illa answer. Income tax shall be charged for any assessment year in respect of total income of previous year of every person at what rates? At the rates prescribed in the Annual Finance Act relevant to the assessment year. Understood the point? There shall be charged or paid. Charged. Payment is different. Charge is different. Charge means a final liability is called as a charge. Today TDS will be deducted. Do you know? Every year I will get the refunds only. Every year I will get. Case Academy will pay. Like that so many people will pay. All of them will deduct what to me? Loudly. I am doing what? Business or profession. Both are there for me. Partnership firm is my profession. Practice. Classes and other things online will be business. Both are there or not for me? Answer, sir. I pay advance tax also. Every quarter I will pay advance tax. I will pay taxes. People already deduct TDS and give me. I will show lot of expenses. After deducting all the expenses, some income will come or not? On that income I have to pay the tax or not? TDS deducted is 10 lakh. My total income tax came, listening, total income and the tax comes to, say for example, 6 lakh, 4 lakh refund I will get. Understood? So government is not looting you. Government will tell that deduct tax at source. If really you are having any payments like deductions, etc., claim that in the next assessment year. Depending on that, you will get the refunds as well. Understood the refund concept clearly? Yeah? Everyone in the class? So this is how the income tax actually works in practical life. Okay? So now what we completed, can you please explain me? What we completed now? Charge of income tax. Section 4 correct interpretation is over. Tell me, what is the meaning of the proviso given there? Proviso. Here proviso is there, na? Yesterday I told you proviso starts with provided that. Read proviso properly. Provided that. Whereby virtue of any provision of this act, income tax is to be charged in respect of the income of the period other than previous year. Income tax shall be charged accordingly. I told now old incomes also can be brought to taxation today. And I told you those will come under this category. Next, whenever I say charged for assessment year, it's charged for that assessment year, but a deduction will be made in the same year while paying if it is having a TDS obligation or advance tax obligation. Did you understand the point or not? That's it. This is the end of a very important section called as section number 4. But section 4 has given us 4 important points to consider. Number 1, assessment year. Number 2, total income. Number 3, number 4, person. Number 5, Finance Act. Understood? Take a break and come.